begin with tech. That NASDAQ hitting a new record high off of the open today. Amazon, Microsoft, Facebook, Google, all reaching new milestones. Apple getting awfully close as well. That stock's been on the move big time. As I said, it is great to be back. It's good to be with all of you. Josh Brown, aside from those, I've got CrowdStrike, which is yours. I've got NVIDIA, which is yours, and they are ripping.
Yo, there was this moment like 2 months ago where everyone was like, oh, cyclicals, like you have to be in these companies that were founded in 1890 and pull copper out of the ground and turn it into pet rocks. And that's super cool. But in reality, all that was really happening beneath the surface was the growth trade was biding its time. You saw these epic setups forming, these really long bases. Amazon, such a great example of that. We talked about the bigger the base, the higher the space. Amazon's been basing since July of last year. This breakout, which today is absolutely epic, is almost 12 full months in the making. And there were a lot of charts like that. So now the cyclicals are getting whacked. The XLE is down 3%. They're hitting the regional banks. There's a lot going on right now, but people are returning to the companies that they know, even if the economy has peaked in terms of its growth rate and starts to decelerate, they know that these companies are not peaking, are not decelerating, are a secular story. So there are a lot of places to go for investors. It's not just 5 stocks. It seems like that sometimes, but obviously the big 5 all look phenomenal today. Google new highs, Microsoft new highs, Facebook new highs. But then look, Shop is running, Zoom is running, DocuSign's running. So there's a lot to like in the long-term growth trade. Those stocks are working really well once again. And I hope you didn't sell them all out to buy a company that makes, lead fillings for your grandmother's teeth.
Those stocks are working. I mean, because the 10-year, Pete, is at 143, 140. I mean, that's something you're looking at closely as these stocks continue to work. It's no surprise if the 10-year is falling, then these stocks are going to be working.
Sure. Well, and we talked about this for a long time now. We've talked about the pause that we've seen from Apple and Microsoft. A lot of those names that had paused, although Facebook was not in the pause category, it's been on fire. But you look across at the FANGs.
Sorry to interrupt you, Pete. I overdid it. I'm sorry to interrupt you. I overdid it on the 10-year. We're at 136 now. That's the lowest levels of the day.
Yeah.
You concerned about that?
Right. I think it's something concerning. Raoul Paul's been all over this, and he talked about the idea that, hey, look, everybody's talking about worried about the upside. How about the downside? What if we break through 1.4? What if we start to slip a little bit further? Now, this is one day, so let's not make too much of this. But I think the reality is there are a lot of folks out there that are very, very concerned, I think, watching this. And obviously, you can see that with what people are doing with their hands and legs. They are jumping and getting out of financials and materials. To Josh's point, a lot of those different areas that everybody said, well, you got to be in materials, you got to be in energy. I still believe in the energy materials trade, but I think that the reality is they've had an unbelievable run since November. They've had this incredible long stretch of run. Why couldn't they pause for a little while? Maybe that's what we're seeing right now. I don't think those trades are over with, but I think the reality is we have been starting to see more and more flows come into technology names, whether it's Facebook, whether it's Apple. You go through the entire list, all of those names just continue to hit, including today. The first 4 unusual option activities, this isn't giving anything away because these aren't on the list for later, but the very first 4 that hit on our programs today were Apple, Google, Amazon, and NVIDIA. So it gives you a little bit of a sense of what people going into today, looking at some of the different things that are going on in the backdrop, and a lot of gigantic paper. When I look at Amazon and somebody buys 10,000 calls in Amazon, that says a lot, because we're not talking about dollar calls or $3 calls. We're talking about calls that go all the way up to $40. So very, very expensive, and yet they are continuing to run into a lot of these technology names.
Joe, the 10-year is dragging the overall market, don't you think? I mean, if the 10-year continues to drop, stocks are going to drop. It's in some respects, because now, it's going to make you question. It's going to make you question a lot of things, isn't it?
Well, first of all, welcome back, Scott. But absolutely, we've been talking about the 10-year, and we've been trying to figure the puzzle, the riddle. Why is the 10-year pricing at 1.35? On June 1st, the 10-year was 1.60. We've got a 25 basis point decline here on the better part of 1 month. Since then, growth is up 8%, values down 2%. So what is the market doing? The market is just reacting and responding to that very aggressive pullback in yields. That's why you're seeing right now the attraction towards growth, which really equates to defense in the market. And that's going to continue to persist if you're going to see yields move lower. The reasoning behind why these yields continue to move lower, is it the Delta variant, or is it, Scott, that basically we have reopened? You only reopen once, and the roaring 20s and the narrative surrounding the roaring 20s and outsized above-trend economic growth, well, that's great for society, but maybe not equating to the economy in reality growing organically.